Hello, friends, and good afternoon. Welcome to Power of 20, a learning session for these 21 days in quarantine. First, before starting this session, I would like to congratulate CS Ashwat Gulati, who's been a ClearTax champion during this period of quarantine. He's been very committed to the work and also helping a lot of clients with doing not just filing. Along with that, as he's getting more time, he's also doing reconciliation and all other works. GST and 9 preparation and everything during this period. Okay, so big congratulations to CS Ashwat Gulati from Dehradun. If you also want to get feature with us or for being a ClearTax champion, do send in your entries with your selfie. Okay, so let's start with today's session. Today we will be covering about composition scheme. Composition scheme is another scheme by the government for small taxpayers. Okay, so we'll see what it is in the scheme, for whom is it beneficial, and what are the conditions that are to be met to apply for this scheme. Also, we'll see what are the pros and cons of this scheme and whether you should opt this scheme or not. Okay, so let's start with the session. So first of all, what is composition scheme? Composition scheme is a simplified scheme given by government for small taxpayers because आपको पता है कि कितना complicated है tax returns file करना and all those hustles of GST. So not all the businessmen would be able to afford the services of CAs and tax experts. So for them, government has given a composition scheme wherein they'll not be required to file all the that are required to be filed. They will not be charging and calculating ITC and tax that is collected from the customers and paid to the suppliers and all those things. No hustle for them, and they'll just be required to pay a percentage of their turnover of the particular month or quarter to the government, and be away with it. Even the returns are very simple. The compliance is very little, because the category that this composition scheme is applicable for or beneficial to is those people who have got a lot of number of transactions. However, the implication is very small. Like if you go to a kirana store, they'll sell for 50 rupees, for 5 rupees, for 10 rupees, for 500 rupees, for 5,000 rupees. However, the number of transactions are high. However, the amount that is collected, it will be very difficult for them to calculate all these things. So they've got a large number of transactions. However, the amount involved is very little. So this is typically for those taxpayers who have got large number of transactions and the implication and the amount is very low. Because if they'll keep on tracking the high number of transactions that they are undertaking, the calculations for them, it will be very difficult for them to calculate all these things and come out with the correct tax figures, and that may lead to non-compliance by them. Okay, so this is for small taxpayers. The option of or the rate of tax that they are required to pay is 1% for the manufacturers and the traders, 5% for restaurant and the food business people. That is in Schedule 2, Entry 6B, where they specify that who is covered under this entry. They are basically those people who are supplying articles of food for human consumption. So that is a broad category, but however we can narrow it down to restaurants and those people who are supplying food. Even catering business, yes, catering business is also covered under this as per my opinion. However, there are different views. So this is 5% for restaurant business, and also the government has this was not from the beginning for service providers. Earlier, service providers were not allowed to take the benefit of compositions. However, later on, government came up with a scheme wherein service providers with a turnover limit that we'll discuss later on, that is 50 lakh rupees. We'll discuss about the turnover in the later slides. Can also opt for composition scheme. The rate of tax will be 6%, and that was effective from 2019, April 2019. So this is a basically scheme for composition taxpayers. So the first criteria for opting for composition scheme is the turnover limit. The turnover limit that is applicable, like if you cross this turnover, if your turnover is more than this limit, you cannot opt for composition scheme. So the turnover for traders, restaurants, and manufacturers is 1.5 crores. However, in some states like Himachal Pradesh, Arunachal Pradesh, and northeastern states, the limit is 75 lakhs. Okay, for others it is 1.5 crores. Earlier, there was a condition that you could not be a service provider. So even if you provide service for, say, 500 rupees out of your total turnover, say 50, 60, 70 lakh rupees, you are not allowed to opt for composition scheme. But however, now you can opt for composition scheme, and the turnover limit for service is 10% of the total turnover or 5 lakh, whichever is higher. So that if your total turnover is 60 lakhs and you are providing services up to rupees 6 lakhs, then it is fine. You can still opt for composition scheme and pay at the rate of 1% of the turnover. However, for service providers who are not eligible in this category, for them the rate of tax is 6% and the turnover limit is 50 lakhs. So if your turnover is up to 50 lakh you are a service provider, you can opt for composition scheme, and all those conditions of composition scheme will be applicable to you as well. I just want you to understand that this is notified under section 9 and not under section 10 of composition levy. So there is a little change for service providers. I'll cover up that later on. Like over here, you can see the turnover limit 1.5 crores and 50 lakh rupees. So there is this difference for service providers, and the rate of tax is 6%. There it is 1% or 5%. Okay, so this is the turnover limit for small taxpayer. This is the definition of small taxpayer as per government. Those taxpayer with a turnover of under 1.5 crore are small taxpayers. Earlier, this limit was when GST was introduced in July 2017. This limit was 50 lakhs, then increased to 75 lakhs, then it was increased to 1 crore. However, from 1st April 2019, the notified date was 1st February 2019. But for application, I would say that applicability of composition scheme for turnover, the limit of turnover was increased to 1.5 crores from 1st April 2019 only. Okay, so there the limit has been increased. That was part of the finance bill that was increased. Before that, it was 1 crore. Okay, so let's go to the next condition. There is specific restriction on few people or few businesses, I would say, or taxpayers, whatever you call it, that they cannot opt for composition scheme. The first in that category is non-resident and casual taxable person. There is a provision in the law for casual taxable person who undertakes certain activities for certain period of time to apply for registration under GST and be called as casual taxable person. Also, non-residents can also apply under their respective provisions. They cannot offer composition scheme. Then another category is the people making interstate supply, or vice versa. If you'll see it in another way, anyone who is making interstate supply cannot opt for composition scheme, or if you are a composition taxpayer, you cannot go for interstate supplies. Okay, so another third category is the people who are supplying through e-commerce operators. Like if you are selling on Amazon, Flipkart, Paytm, or anything else, you cannot offer composition scheme. Then this is a category that is a little hazy, is confusing. I'll clear it up. Sorry. Person making supply of goods not leviable to GST. There are a few things which are not leviable to GST. अगर GST ही applicable नहीं है तो आप composition scheme कैसे opt करोगे? So where GST is not applicable, primarily it is petroleum products and alcoholic beverages and tobacco products. So for them, where GST is not applicable, some of the tobacco products are covered under GST. GST is not applicable petrol में alcohol पे, those people who are registered providing these things, they cannot opt for composition. Generally, petrol pump fall in this category. Then a person who is engaged, this is a specific entry. This is government has specified in all the notification that if you are manufacturing any of these, you cannot opt for composition scheme. The first is the ice cream and other edible ice products, or pan masala, or tobacco and manufactured tobacco substitutes. If you are producing this, even if your turnover is say even 5 lakh, you cannot opt for composition scheme. You have to go for regular taxpayer scheme. That is what we have been learning so far in all these sessions. Okay, so these are the people in लोगों को composition scheme नहीं होती है, ये लोग कॉम्पोजिशन स्कीम में ऑप्ट नहीं कर सकते हैं. सो क्विकली, कैजुअल टैक्सेबल पर्सन और नॉन resident, people making interstate supply, or you can say that in composition scheme you cannot make interstate supply. If you are opting for composition scheme, आप Amazon, Flipkart वगैरह पे सेल्स नहीं कर सकते. ई कॉमर्स ऑपरेटर से अगर कोई सेल कर रहा है where TCS is applicable, you can not opt for composition scheme. Next is the person making supply of products that are not leviable to GST, and other is the manufacturer. I'm saying manufacturing of ice cream and other edible ice products, pan masala or tobacco and manufactured tobacco substitute. These people cannot opt for composition scheme. You know, for composition scheme, a big criteria over here is ITC restriction. See, there are certain restrictions that will come forward to, like, if you have opted for composition scheme, what you have to follow. This is a major, like, now that we have started, I've covered, you know, कौन इसमें cover हो सकता है, like what is the turnover, what are the activities if you are undertaking you cannot opt for composition, or if you are opting for composition, what are the kind of activities that you can undertake. We have covered this much. Now there are certain more restrictions. The biggest restriction is the ITC. If you are claiming ITC, you cannot go for composition. However, it is vice versa. If you are opting for composition scheme, there are certain restrictions in relation to ITC. First is, if you are a composition dealer and if you are purchasing from a taxable person and you have paid GST, you will not be allowed to claim ITC. We have learned a lot about ITC in the earlier sessions by our expert. Okay, so ITC cannot be claimed by composition dealer. Second restriction is, if you are a composition dealer and if issuing the invoices, first of all, the invoices will be called bill of supply, that will come in later slides. If you are composition dealer, you cannot charge tax to the customers. So on the bill, you cannot specifically mention GST at the rate of 1%, as we get in the normal tax invoices. We have covered that in the tax invoice session. So that also you will not be allowed to mention that, and also you will not be allowed to charge GST extra from the customers. The third restriction that there is on ITC is, the person who is buying from you cannot claim ITC on the purchases made from you. Though he has paid 1%, 5%, or 6%, as the case may be, the amount of GST to you, still he cannot claim ITC of that amount. So there is a big ITC restriction if you are opting for composition scheme. We'll see that with examples later on, that how is it going to affect the amount that is paid to the end consumer. If the ITC chain breaks, what happens? So briefly, we can understand that as a composition dealer, you cannot claim input tax credit of what you have paid to your supplier. You cannot charge tax from the customer, and also the customer to whom you have sold cannot claim the ITC of that tax paid. Okay, so this is a very big important thing for composition dealer, where monetary consideration while you are thinking if you should or should not opt for composition will be determined based on these parameters. This is a very important financial part where it is applicable, like which impacts the decision. If I want to opt for composition scheme, how do I opt, is the next question that comes to mind. That people who are good with it, like, I want to go for a composition scheme, how do I do that? See, there are two ways to opt for it. First is when you are an existing taxpayer, like, you your supplies on regular basis, and you decide that this is not the thing that I want to do. I don't want to comply so much, and my business is also very small, and I do not, you assess the financial impact and you decide to go for composition scheme. For those people, existing taxpayer, there were two criteria, like two categories of people. One was those people who were registered under the earlier law, as in service tax, VAT, or excise, as on 1st July 2017. For them, they were automatically migrated to the new system, that is GST regime. So they had to file CMP 01 for opting this composition scheme, and when they opted, they were allowed to go for composition scheme. However, that is an old case now, that is not applicable, and those kind of cases will also not be seen. So for now, what happens is, the existing taxpayer can file in CMP before the end of, like, before the starting of the financial year or the end of the financial year after which you want to offer the scheme. However, this date is extended for now, like for 2021, April 20 to March 2021. If you wanted if you want to opt for composition scheme the year that has just started, you can opt for that up to 30th June. Earlier it was before 31st March 2020, like before the year starts you have to opt for composition scheme. However, this year they have changed. Like for this year, due to the special circumstances that we are in, government has provided an extension up to 30th June 2020. So during the year if you want to opt, you cannot opt for it, and that is really different from the other schemes like monthly, quarterly. You cannot opt for composition scheme during the year. You and once you have opted for it, you have to carry it on to, for the whole year, or if the condition is not met, or if you want to opt out. If you want to opt out, you can still opt out, but so you cannot opt in the scheme during the year. You can do it only once at the beginning of the financial year. Whereas if you are making a new application for new registration, there is an option, there is a section where it asks you if you want to apply under composition scheme. Under section 10 they mention it. If you are clicking that option, if you are opting for that section 10 in new registration, like reg1 form when you are filling, then you will be given the registration under composition scheme. So you will be a composition dealer under GST. Existing taxpayer CMP 01 or 02 will only be applicable. And along with that, when you opt the existing taxpayer, if you are opting for composition scheme, you have to give a declaration in ITC 03 within 180 days of the stock that is lying with you. Like when you opt for composition, all the credit that is lying with you on the stock that you still have with you, you have to reverse that credit. So that you will do with filing of ITC 03. Okay, so that is also one thing that is to be taken care of when the existing taxpayer is opting for composition scheme. So next are the guidelines or restrictions or rules for composition dealers, whatsoever you like to call it. For composition dealer, like you have become a composition dealer, so now what do you have to follow? First thing that you have to follow is, instead of tax invoice that a regular taxpayer does or issues, you have to issue a bill of supply in which you will not be allowed to charge GST. This is covered in the invoice section, I think. Invoice and debit credit notes. So for composition dealer, tax invoice will not be there and bill of supply will be there. The content of bill of supply is almost same. You are required to mention your GST number, name, address, and etc. Invoice number, date. It should be serially numbered, and all those things. All those conditions are same. However, on the top it will not be tax invoice, it will be bill of supply. And also on that bill of supply, it is very important that you mention taxable person not eligible to collect tax on supplies. That is also to be mentioned on your bill of supply itself, so that the person understands that this is a purchase from composition dealer and I'm not allowed to take credit of that. Anyways, separate different separately the tax will not be mentioned, so anyways he'll not be allowed, but still you are, for the safe side, you are required as a composition dealer to mention these words. The third point, the another thing that you have to mention on your place of business, the principal and all the other places of business, you have to mention it on the board, composition taxable person, on all the signboards and every notices wherever you have mentioned your name and GST number. Along with that, you also have to mention composition taxable person, so that the person is knowing that this is a composition dealer, and we are not we are not required to pay additional tax, the normal uh, the amount of supply that we are paying to the dealer. Okay, and also the next thing that I've already mentioned is, you cannot charge GST from the customers. Whoever the customer is, whatever, like if you are selling say soap for 20 rupees, then you cannot issue him a bill with 20 rupees plus 5% GST. 20 rupees is inclusive of the tax, inclusive of 1% that you are required to pay. Also for service providers, also the 6% amount looks a little more, but if they are issuing an invoice of say 10,000 rupees to anyone, that includes the GST amount of 6%. So that you have to reverse calculate and pay. Okay, that cannot be charged to customers. This is a very strict rule that is to be followed. Also, one more condition, like reverse charge, we have seen in the earlier slides. Reverse charge we are we are required to pay some amount on the things that we are buying, not on what we are selling. So this is reverse charge. Reverse charge is actually applicable for composition dealers as well. Like if you have taken a composition scheme and if you are say availing services of say lawyer or security services or whatever is covered in section 93 and 94 on RCM, if you are availing any of those services, you are still required to pay tax on reverse charge basis. Needless to say, you will not be allowed to take the ITC credit of that. उसका आप credit भी नहीं ले सकते, पर आपको reverse charge में जो भी आपने purchase किया है या acquire किया है services, you have to pay tax on that on reverse charge basis. Okay, so that is additional cost. उससे composition dealers are not, cannot escape from that provisions. So that is applicable for composition dealers as well. This is very important to be remembered because I've seen many clients that they just forgot to mention that we have availed this service. So this is something that is very important, that a guideline should be given to the clients, and also a list of services that are reverse charge. You can get it from our website, and also you can share it with your clients so that they are aware that if we have purchased these kind of, or we have procured services from these people, we are required to pay reverse tax on reverse charge basis. Because if an officer is finding out about this, then they'll be required to pay with interest and penalty. So it is very important. This is something that everyone also forgets to mention. So payment under reverse charge is also required to be done. Then returns that are to be filed are very simple, but because there were recent changes, like last year they had made some changes in the returns that are required to be filed by the composition dealers. That is why it is a little tricky. So we'll simply take July 17 to March 2019. GSTR 4 was required to be filed quarterly from July 17 to March 19. However, after March 19, that quarterly form is CMP 08 with even lesser details. Even GSTR 4 was, having not many details, though it was having some details which is more than CMP 08. So March 19 तक आपको GSTR 4 फाइल करना था क्वार्टरली, और मार्च 19 के बाद यानी कि अप्रैल 19 से लेके अब जो समय चल रहा है, on quarterly basis you are required to file CMP 08, and GSTR 4 has become annually. So for financial year 1920, the annual return is GSTR 4, and for 1718 and 1819, the annual return was GSTR 9A. That has also been made optional for taxpayers. So if you have not filed GSTR 9A, that is fine, but that was an annual return up to March 2019. 1920 annual return is GSTR 4. As on today's date, quarterly you have to file CMP 08, wherein you just have to declare your turnover, the tax rate, and the amount of tax you are required to pay. GSTR 4 is required to be filed annually as on this date, and 9A stands scrap for GST for composition dealers. These are the guidelines for composition dealers that is to be carried out, that is to be taken care of by the composition dealers. So now let's come to the financial things, the numbers that will help you decide if you should be going for composition scheme or if you should not be going for composition scheme, and how the prices are affected. So the first example that we are taking is assuming all the taxpayers are normal taxpayers, like whatever conditions and whatever things that you have learned about ITC, about the supply, about charging of tax and payment of taxes, that is all applicable to all these tax: manufacturer A, dealer B, and dealer C. For simplification, we'll assume that dealer C is the retailer that sells to the end customers. So manufacturer A, let's say its cost was 900 rupees and he charges a profit of 100 rupees, and selling price is 1000 rupees for him, and he charges 18% GST on that, assuming that GST is applicable at the rate of 18% on these kind of transactions. So the total amount that he'll be charging dealer B is 1180. However, the cost for dealer B is only rupees 1000, that is the selling price of manufacturer A. Why? Because 180 rupees of GST that he is paying, he is eligible to take credit of that. And ITC credit, we have learned in the earlier sessions, that can be used to offset the liability that you are required to pay. And let's assume, then let's come to dealer B. His cost is 1000, and let's assume he keeps a profit margin of 10% and his selling price is 1100 rupees. He charges again GST at the rate of 18%, that comes rupees 198, and he gives an invoice, tax invoice, to dealer C, who is going to now pay to sell it to the customers and consumers of rupees 1298, wherein there is a GST of 198 rupees and selling price of the same is 1100. Again, the cost for dealer C is 1100 only, because he will be claiming the ITC of rupees 198 that he has paid to dealer B as GST. Okay, so again, assuming that he keeps a margin of 10% only, so the selling price becomes 1210, and he'll collect 218 rupees from the customer, and total amount that comes is 1428 to the end consumer. Here they will be having this profit that we are seeing in second row. This is the profit that they will be getting, the dealers. Okay, this will change a little bit when we'll see the composition dealers calculations. So for the end consumer over here, what we have to see is the end consumer, he'll have to pay 1428. Now let's consider another example where in the complete chain from A to C to end consumer, the composition dealer is the middle dealer, dealer B, who buys from A and sells to C. What happens if dealer B becomes a composition dealer, opts for composition scheme? The first, for the manufacturer A, all the things remain same. The selling price will be 1000 and GST will be charged at 180 rupees, and total amount 1180 will be paid by dealer B to dealer A. But however, in this case, the cost for dealer B will become 1180 rupees. Why? Because the composition dealer cannot claim the ITC of 180 rupees that he has paid to manufacturer A. So that becomes his cost, because he will not be allowed to claim ITC. Assuming that he keeps the profit at 10%, the selling price will become 198 rupees. And again, selling price to the consumer, sorry, not consumer in this case, dealer C, the price that he'll be paying is 1298. Here the calculation changes in the last two rows. The GST at the rate of 1% is going to come out of pocket of dealer B, because he cannot charge it from dealer C. So net profit that he'll be having is rupees 105 rupees, not 118 that he assumed to be the profit margin. So when we come to dealer C, again the cost for dealer C will become 1298 rupees. How this will become 1298? Because this is the price that he is paying to composition dealer B, and he cannot claim ITC of this 13 rupees that composition dealer is paying to the government. So again, assuming that he keeps a profit margin of 10%, which comes roughly to around 130 rupees, the selling price will become 1420, on which 1428, if you remember in the last slide, 1428 was the amount that he was charging the end consumer. However, in this case, he will be charging a total amount of 1685 rupees to the end consumer. So the ITC that was flowing, the 180 rupees from manufacturer A, the 13 rupees that he's paying to composition dealer, all adds up to the cost of the dealer C. And again, all the 257 rupees, whatever he'll collect from the consumer, he'll pay it to the tax authorities. So the amount for the end consumer becomes a lot more. Also, in these cases, practically what will happen is dealer B will try to find another dealer instead of dealer B, say dealer Z, who is not a composition dealer, because for him the cost will be reduced. And as we see in this case, he'll be charging rupees 1298, but 198 rupees will be credit for dealer C. So scenario in real business world is a little difficult to find, but dealer B will have to think if he should offer composition scheme or not. Okay, so let's take another example, which is an ideal case. If dealer C is a dealer C is the composition dealer. This is where government intention is behind of the law. That one who is selling to the consumer can opt for composition scheme, and he does not need to maintain all the books of accounts, calculate the tax liability that it is required to pay, how much he has charged, how much is the ITC, what is the offset rule, and all those things. He'll not be required to do all those things, and he can simply just pay 1%. Okay, so in this case, manufacturer A will have a normal flow, 900 cost, 100 rupees profit, selling price is 1000, GST 18%, total 1180. Cost for B will become 1000, as he can claim ITC in this case of 100 of the 180 rupees that he's paying to dealer A. he'll add 10% profit margin. Selling price become 1100 for dealer B, and he'll charge 198 rupees as GST at the rate of 18%, and total bill amount for dealer C will be 1298. Again, 1298 is going to be cost for dealer C. However, he'll be reduced by the he'll not be required to do all the compliances as a normal taxpayer. So the cost benefit analysis he has to do according to the amount that he's, according to the sales that he's making, and the amount of ITC that is being accrued to him. Okay. However, in this case, the cost will be 1298. Assuming that he keeps a profit margin of 10%, that comes to roughly around 130 rupees. The selling price will become 1428 rupees, on which he'll be required to pay GST at the rate of 1%, because the turnover over here is 1428 rupees. In this case, his profit will be 116 rupees. Though his cost is increasing over here, you can see the net profit is rupees 116 rupees that he is attaining after all these things. We'll compare this to first example wherein all were regular taxpayer. I'm skipping the second example wherein a person in the, in the middle of the chain is opting for composition, because that is very unlikely. You can see the selling price in this third example is 1428 rupees to the end consumer. Also, it is same in the first example when all the taxpayers are normal taxpayers. 1428 is what it is charging. Over here, you can see the dealer C, the profit margin is 110 rupees. GST, what he is collecting, he'll use the ITC that he has, and the rest he'll pay from his pocket. And working capital calculation, everything will be required. However, he's charging 1428 to the end consumer, and he's getting a profit of 100. Wherein if he is opting for composition scheme, he is getting a profit of 116 rupees. Also, that the selling price is the same for the end consumer, 1428. This is where the intention of government comes in. This is what government has intended for the kirana stores, for normal suppliers, or those people who are, providing it to end consumers. So this is a basic calculation that will help you decide if you should, opt for composition scheme or what you should do. I'd like to share a real life example over here. One of my relative is having a mobile store, and they were considering going for composition scheme. However, in their business, the margin was sometimes very good on, say, accessories and some of the phones, but in many brands they did not have margin of even 5%. For their, if they, give up the ITC, so their costing was increasing a lot. However, the margin that, like, if you'll see in, I'll show you in the first case. See, the GST that is additionally paid is, if there is a 10% margin, if you will calculate the amount of additional GST to be payable, that would have been covered in the payment of tax session, or it will be covered in the return section. You will see that only value addition, like if you'll see 10%, this is the amount that is payable. Out of 218, if you remove 198, dealer C will be paying only 20 rupees in cash, and you can see that 20 rupees is 18% of the margin that he's charging. So practically only the value addition, whatever the profit you are charging, is the additional amount on which you have to pay tax. So for the mobile business, the margin was not much. Because of this, they will lose out on competition. So even though they are supplying to customers only and their turnover was very little, it was still beneficial for them to go for normal scheme. However, this is a case to case basis. If they would have got a good customer base, and the experts that they will be required to, that will be required to turns was, the expense was very high, then they will have to again see where and how they can charge. So this is what I want to say, is basically this is case to case basis, if you should be opting or if you should not be opting. This is to be decided on case to case basis. However, if you take these examples, it will be helpful for you to take down the benefits in the financial terms. Okay, what is the financial implication that you'll be able to know. Okay, so after this, effective date and validity. So after taking up the financial implication, after registration, the effective date from when you will be, liable for composition, to be a composition dealer and issue a bill of supply and not charge tax from the customers. The effective date for existing taxpayers will be the beginning of the financial year when they are opting in for the payment. I'm not covering those people who are registered under the it is now of no use. So for existing taxpayer who decide that from next year I'll be a composition dealer, the beginning of the financial year will be their period from where they'll be required to not charge GST from the customers, issue a bill of supply, and take care of all the composition dealer filings. For new registration, when their registration is approved and they get the REG 06, that is the certificate of registration, from that day onwards it will be applicable. And I would like to add over here is, if you are registered, say someone registered in December 2019 and he was a composition dealer, new financial year begins, so he'll be continuing to be composition dealer. He did not do anything else. If he wants to opt out, he'll have to opt out. The scheme is mentioned below, I'll talk about that as well. But if he does not want to opt out, he does not have to do anything. He'll continue to be a regular tag, composition. And the validity of this is until you either opt out of the scheme. For that you have to file CMP 04 and ITC 01. That gives a declaration of the ITC 01 is another important beneficial form if you are opting out. So whatever stock you are holding as on date when you are opting to come out of the composition scheme, as on that date, whatever stock you have to declare in ITC 01, and you will be allowed to take the credit of that. Okay, that is to be filed within 30 days of filing of CMP 04. When you are saying that, okay, I'll now become a regular taxpayer, so you can claim the ITC of the stock that is available with you and file ITC 01 for that. Or the second thing, when you will be opting out, is the on violation of any of the conditions. Example, turnover. If your turnover crosses 1.5 crore, you have to make an intimation under CMP 04. Of CMP 04, declare the stock in ITC 01 and opt out of the scheme. So that is also one of the reasons for opting out. If any of the conditions are violated, again you have to opt out. Or your turnover conditions, as in you want to undertake an activity that is prohibited, like if you want to start manufacture of ice cream, so you will not be allowed to. If you want to do that, you have to opt out of the scheme. Or another case that may come up is the cancellation by GST officer. There are notices being sent. A GST officer, if he has a reason to believe that you do not fall in the category who can opt for composition scheme, or if you have violated any of the criteria like manufacturing of something, or you have made interstate supplies, or you are selling through e-commerce operator, he may issue a notice on which you will have to reply. First, any officer will first give you a show cause notice, based on which you will have to reply within a certain time period. And based on that reply, he can either sustain that, okay, you can continue to be a composition taxpayer, or he may ask you to opt out of composition scheme. Okay, so these are the three conditions, three ways where you can opt out of composition scheme. Until you opt out, your validity of being a composition dealer will remain as it is. So now let's look at the question that is the biggest question. Should you opt for composition scheme or not? Or should you advise your clients to opt for composition scheme? We can, as I mentioned earlier, it is on a case to case basis that you will have to see. You can use these examples, or you can make up your own and see if you are a dealer C, or if you are dealer A or B, or the business scenarios, whatever is the applicability and the financial implication, if he is able to charge customers GST, or is it always going to be like for a boutique? If you go and buy a jeans from a boutique, you will be concerned about if he says like 2000 rupees ki jeans hui plus 18% is the GST. When you go and payment, he gives you a bill of 2360. That does not happen. You will say you told me 2000, and that is always inclusive of the price. So there are certain factors that you have to keep in mind. However, we can see a few pros and cons of this composition scheme. The first pro is that there are very less compliances. You are not required to maintain the books of accounts. You are not required to calculate your liability. This is what I have charged from customer, and this is what my ITC is. This is what I'm required to pay. If my supplier has paid or not, there is another confusion that we have seen in the ITC session. Again, the tax liability is also limited, as you are just required to pay 1% or 6% or 5%, whatever is applicable to your business, and you just have to pay that and done away with it. After that, no one is going to ask you कि ये कम भरा, your supplier has not paid tax, and all those things. Notices will reduce and limited tax liability. Then is also very simple, like 1% turnover का 1% लिया and that is done. Okay. Also, yeah, one thing I forgot to mention over here is the limit for turnover. The turnover limit in this case is on pan level basis. Okay, pan level basis as in आपका पूरे इंडिया में जितने भी बिजनेस चल रहे हैं सबकी मिला के देखी जाएगी, आपकी लिमिट 1.5 करोड़ के अंदर है या 50 lakhs के अंदर है या 75 lakhs के अंदर है, एज द केस में बी. Your turnover should be within that limit on a pan level basis, and it cannot happen that you are opting for composition scheme for one state and another state you are opting for another scheme. So turnover is to be for important, it is an important point that turnover be taken at a pan level basis. Okay, so let's come back to the pros and cons list. So expert assistance is also not required. कई बार आपको सीए की जरूरत पड़ती है कि यार ये हुआ नहीं हुआ and everything. You are required to have either a team in your business or you require some expert assistance or consultancy. For businesses, the consultancy required over here will be very less, just turnover, amount of turnover and percentage on that, and this is the liability. On an annual basis, they'll just be required to file one GSTR 4 or 9A, that has also become optional. So these are the pros: lesser liability, lesser compliances, and expert assistance is not required. And if you come to cons, this is again financial cons are much higher in for a composition dealer. The first thing is no ITC claim. ITC का आप claim नहीं कर सकते. Whatever you have paid to your supplier is your cost. Though it is simpler for the calculation point of view, but it has a financial impact. You cannot collect additional tax from your customer because also he'll not be able to take credit of that. So if you are into B2B business, or if someone comes to you and say you get a bulk order from a business, though you are supplying to customers only, but if you get bulk order and if he says that I want charge me GST, but you cannot charge him because he'll not be able to claim ITC. So business decision also is an important point in considering cons. You cannot sell on Amazon, Flipkart, and all those e-commerce operators who are required to collect tax on the turnover, all the turnover that is being done through them. Also, you cannot make an interstate sale. If you get an order from other state, you cannot supply to them because there'll again be a violation. Then interstate supply kya hoti hai, sir? We have discussed that in the place of supply and the type of supply provisions earlier sessions. You can anyways go back to those videos on YouTube. Also, as I mentioned, no ITC to customers. So if you'll see what are the benefits and what are the limitations in this scheme, you will be better be able to decide if you should go for composition scheme or not. However, you can use calculations, use this video, this knowledge to decide if you should be advising your client or if if you should be opting for composition scheme for your business or not. Okay, so that was all from composition scheme from my side. So catch us on another topic tomorrow, and on the same time you will be having the same session. And also all these videos are also available on YouTube. The recorded sessions, they come after a day or two on YouTube on our ClearTax channel. So if you want to refer it to someone, or if you would want to go back to some of the topic or some of the points, you can again go back and visit our YouTube page and go to refer. And also you can give it to your articles and office staff to sessions and learn about some topic or the other from their home if they have missed this session. Okay, thank you so much. And for any inquiries, you can just email us at gstsupport@cleartax.in or dial on the number 080 6745 8707. Thank you.